Good morning and welcome to Markets Now. I'm Michelle Rook along with Nick Cholas with the Farmers Keeper. And Nick, let's talk about higher opening in both grain and livestock futures trade this morning. But soybeans took a little bit of a setback yesterday. It looks like we took some rain out of the weather forecast in Argentina or put some in. Today we're taking it back out. So this market is still entrenched in trading that Argentina weather forecast, and the meal market certainly is.
Every day, she loves me, she loves me
She loves
not.
me
She
not.
loves me, she loves me not. It looks like we go back and forth. Something else I'm noticing here, just right at the open on beans, is we might be closing up a little bit more of that gap between old crop and new crop that we saw yesterday that we really haven't seen in a while. That's kind of a reversal on the spreads, but are we going to see things continue to change in that direction later? We don't know.
Yeah. And of course, Argentina, southern Brazil have been kind of the focal point where we put weather premium in the market. However, we're starting to bring that Brazil crop in. The early harvest reports are very good. So, at what point is
Right.
that hedge and harvest pressure going to start hitting the market and maybe pulling us off these levels?
Well, on one hand, perception is reality, and everybody still has that same perception. But if you look at StoneX's estimates from the last 24 hours, they've changed their estimates and looking a little bit higher.
Right.
So you've got to take that into account. I think from what I've heard from a couple reports on the ground down there, Brazil's harvest being behind pace by about half from year over year has a lot to do with just all these rains that have come in, which it looks like too late kind of at this point. And that's just logistically holding everything up just from mud on the roads and their infrastructure. But they'll make that up eventually. Doesn't necessarily have to do with the health of the crop.
Let's also talk about exports, weekly exports out this morning. An improvement in the corn market, not
Yep.
maybe a little bit softer over on soybeans and wheat, a little below expectations. But even though we saw corn exports better, we got a long ways to go to catch up, don't we?
Yeah, we do. I mean, I think we're about 43% behind, but I mean, that very strong sales report is actually showing in the spreads here. We're seeing old crop or the upfront contracts up a little bit higher than new crop because we've still got quite a bit to shake out there. And it is nice to see a little bit of carry out on the 2023 crop that we haven't seen for a little bit here in the market, just from December to March too.
Yeah. And is the acreage battle starting to play out back there in the new crop contracts? Is that what's going on?
Well, the way we've figured it right now, there's not much of a debate between corn and beans. If we're just looking at the average producer in the I states, we
Okay.
need a ratio of 2.6 or so to make it more competitive between corn and beans. Right now, corn is still king if you look at it. Any way you chalk it up.
Right. Of course, your expertise is cash grains. And let's talk about that because really these cash markets are very, very strong, and especially in those grain deficit areas, aren't they?
Yeah, and again, we continue to see that even as ethanol production has been kind of volatile, and we just got back up apparently this past week. But if you look at just spreads of basis spreads between old crop and new crop, that's also playing out, and it kind of signals to me that the grain elevators are still betting on the side of getting as much crop as they can right now, and we're seeing that in any way in futures prices. We're also hearing from a lot of producers, and I'm not necessarily against it, that they think as we get into the 2023 crop, whatever they do sell at harvest, they're also going to wait longer to set that basis
Mm.
on to collectively put the pressure on the elevators to bid up for that corn and beans.
What are your livestock customers telling you? I mean, we've got cash bids over $7, $8 in parts of, like I said, the drought areas of the western, southwestern plains. Can you make that work down there in those areas or not?
It's going to be difficult, but we just got news about a reduced herd size. So if anything happens and we see a pop in prices, hopefully this time around this year, it's going to get reflected in their own margins. But it depends on what side of the fence you sit on as a feeder. Some of our customers that are also corn and soybean producers, for their balance sheets, they kind of want to see high feed prices because it reduces the price of a lot of the secondary feeds that they're feeding, like bread or candy or anything like that they're mixing in, and it reduces that burden. And it's nice on their balance sheet because the grain operation gets a big profit and they're writing off a bunch for their feed spend. But certainly it doesn't do you any good if you're running just a pure feed operation right now. It's a challenge.
Absolutely. The last thing I want to talk to you about, it is February. The spring price for insurance is going to be set. We're going to be closely watching that, aren't we?
Yep. So just as a benchmark, last year it was $14.33 for beans and $5.90 for corn. If we just look at the November and December contracts right now, we're quite a bit below that, but still at healthy levels on beans at $13.70 this morning. And on corn, we're right about there dancing, $5.97 right now. Let's see what happens. Keep your eye on that. And there are websites out there that you can monitor it every single day, but that's going to be a big determinant here as more new farm participants are getting into the market to make their first new crop sales to really understand their profitability.
Absolutely. It'll have a little to do with that acreage battle, obviously. All right. Thanks so much
Absolutely.
for joining us. Nick Cholas with the Farmer's Keeper, and that is Markets Now.